vacation. If you don't like it like that, you should go and change.
Just going to Nazare. What do you have to say about going to Nazare, Franzi?
My calves!
We went jogging yesterday and, well, you see the end result. I just feel beefy these waves. Hey Franzi, how big were the waves?
7 meters.
This is 7-meter waves. There's the lighthouse. So this is 7 meters. That's 21 foot for anyone that's not aware. How can somebody be so ridiculous? Was ist das denn hier? Hello guys and welcome back. I hope you enjoyed that little intro clip there. That was still one of the last, it was like the last day in Portugal. We were visiting Nazare, a big surf location. I'm sure some of you guys already know about it. Anyway, welcome back guys. So it's it's November 3rd. It's election day. It's still pre-market based on Eastern Standard Time. So we got some time to do a little bit of an October recap. I'll try to go through it as quick as possible. I want to make a focus really on what's going to be the trends for November. What are we seeing near the end of October that we could carry into November, because that's what we did in September, and that helped us make September one of our best months so far, and October was one of our best month so far. So really always understanding where the shifts and kind of capitalizing on that. So I do want to make that a focus on this recap as opposed to specific patterns, because I've noticed, I watched all the past recap videos and we talked a lot about patterns in the last recap video. So you guys are more interested in recap patterns, check out those former monthly recaps. Okay, so major events very quickly. October 5th, we returned from Portugal. Not really important for you guys. I do want to kind of state this though. I started waking up at 5:45 a.m. Eastern Standard Time. This well, not Eastern Standard Time actually, in local time. This really helped me get a lot more done. Trading is my main income, but I still have a few other businesses, one of which is actually coding trade journal. So that takes me quite a bit of time, and I like to do that usually in my morning. So that, you know, this really helped me get a lot more done every day, because usually after 6 or 7 p.m. Eastern Standard Time, like, it's really hard for me to work on stuff, probably because I woke up so early, but just in general, you know, there's dinner, there's so many different events, you know, going over to friends, or, you know, having a beer with somebody or something like that. I find it very hard to focus in the evening, because the world is kind of demanding so many different things. In the morning, you really have your time. So yeah, I just wanted to point that out. It's a big change I've made, and it's helped a lot. I kind of started doing that mid-September. Also, I started putting my watch list online, like you guys are probably aware of. If you go to tradejournal.co/Winkler, you guys can see my profile here. And you can always see, so today, Tuesday, pre-market top gappers, we got JA, KK, TRVG, and IEA. And if you just click on that, you guys always have access to all these things. You can see kind of what I'm thinking about each different ticker. I used to use my yellow notepad, which I'm sure you guys are aware of. So I kind of switched that out a little bit. We also got a new sponsor, Yoda Savings. It's a lottery-based savings account. It's in our Discord. We'll be posting some lottery winnings there as well. October 16th, guys, that was the Trade Oktoberfest. Yeah, that was a ridiculous event. Again, congratulations to the winner who posted up at Slash with the Best Outfit Award. That was a really funny day. I can't wait to crack another beer on a live stream with you guys. October 21st was my disaster with the post office pre-market. We had a whole video about that. And October 26th is when we did the interview with Peter Klampka from Cardia Kitchens. If you guys want to watch that, I've been getting some pretty good feedback on that interview. Okay, so let's talk about the trading here. What are the main takeaways on the actual trading that we did? Well, like I said before, I watched all my old recaps, my monthly recaps, and I would say not too much has changed in my own style. I think I've really, over this year, I've really kind of figured out like what I'm good at, what I like, my personality in terms of day trading, small cap gappers. And I think I've become very, very consistent overall. Now, there is a few things worth considering. It's like some months, like September, dip trades were doing much better. So we're below VWAP, we're below the 9 EMA, and I'm buying dips and I'm selling on the retraces back to the 9 EMA. Now that has stopped working in September and even more so in October. So that's, oh, did I say October originally? I meant to say in August. That was like my go-to strategy. So in August, dip trading was amazing. Then in September, it started switching at one point. In October, it became very, very tricky because when a stock has been selling off, then it starts flushing much, much harder. Before it was kind of just, a slow move to the downside. We'll check out some more patterns in the future, but really kind of knowing what overall market you're in, knowing, should I pivot between, this strategy or this strategy is really, really important. So just, being open mind, don't being, too stubborn because, let's say, oh man, yesterday I traded pullbacks or I traded breakouts. It was amazing. Does not mean it's going to be amazing today. So I know that's a very obvious thing, but I just feel like it's something I have to always remind myself, and I like to share those things with you because man, sometimes I'll be super aggressive pre-market for no reason, just because yesterday was good to be aggressive pre-market. So yeah, also not all trades are created equal. I think this is just so important. I mean, oh my god, I honestly just can't highlight this point enough. If like, let's say I'm trading a breakout, I'm not good at trading breakouts, I should not be getting super aggressive with size on that breakout trade. While if I see a perfect pullback on, let's say, VWAP on a first break with no former flushes, maybe I should be getting, really aggressive on this setup, $5,000, $6,000, $7,000, $8,000, as opposed to maybe $3,000 on a not so good setup. Because there's nothing worse than, having a few good, base hits, but with small size, and then, getting aggressive because you're like, oh, those last few trades work. Let me get aggressive on this one, but it's not even that good of a setup. And then, giving it all back in one trade. That's that's a disaster zone. The month, and that's kind of what happened to me a little bit here at the end of the month. You guys probably remember. It ended sloppy for me. There was a lot of trades last week, specifically where I really lacked a lot of conviction behind the tickers. I wasn't super stoked. It was a little bit sloppy. We're getting fake outs. And then I missed a few trades. And then I started, doing sporadic trades because I had, a little bit of FOMO because I missed the setup, and then I would get a flush. I think there might be a little bit of this due to a lack of my swing trade portfolio was kind of messing me up, maybe psychologically. I'm not totally sure about that, but my swing trade portfolio took a pretty big hit. And we were down like for almost $5,000 at one point, and I was just like, even if we made like a $500 a day trading, I'd be like, oh man, we're still down today, another $1,000 on swing trades. So maybe, I don't know, maybe I was creating a little bit of a psychological problem for me. And this is kind of silly because I've always been a big advocate of separating your accounts, right? If you have a day trading account, that's your day trading account. If you have your swing trading account, that's your swing trading account. You have your dividend account, you have your growth account. I always separate my accounts. Now in October, I kind of broke my own rules because I was fully allocated in my swing trade account, and then I had just a bunch of cash laying in my day trading account because it's a margin account. And since we're only trading a small portion of that account, because we just need it to be over $25,000. But honestly, we don't need that account much more than like $30,000, $50,000. It just doesn't need to be more than that, because you could use $50,000 per trade if you wanted to, because it's a margin account and you just use it again, right? So there's basically just a big chunk of change sitting in my day trading account. And then I was like, well, let me just, allocate some of these trades, this portfolio to swing trading. Which I did. And then I think, having all those in one portfolio, I think messed me up a little bit. So I do want to kind of separate that again. I don't think I was the biggest fan. I don't think it messed me up too much, but at the same time, I don't know. I wasn't super stoked about the idea. Yeah, I don't know. The big problem is with the cash accounts, like my IRA, you have to wait for your cash to settle. So you can't like take profits and then re-enter, like let's say tomorrow. It just doesn't work. So that's also a little bit annoying. Yeah, so one thing I wanted to maybe do to kind of address that issue is maybe move more cash into my Roth IRA, and then, focus that on really growth swingings, and then use my other dividend portfolio for those value plays a little bit more, keep that separated. And then we could talk about, we have a lot of EV stocks we're holding right now, so moving that to probably our growth account and our long-term kind of investment account, and then maybe some that into the value, almost like Tesla at this point. So yeah, I think in the future, guys, you could probably expect a lot more kind of videos or just in the live streams, and we kind of talking about overall account allocations, different portfolios, growth accounts, dividend accounts, how we set all those things up, really kind of setting yourself up where day trading to me is like a job. I come to, let's say, quote unquote, work every day. I, trade pre-market and the market open. So almost like 4 hours of trading every day. So that's like my job. I go to work. I either, if I don't go, I don't make money. If I do go, I have the chance of making money, right? So it's like, to me, day trading is very much job based, while investing is very much, hands off, wealth creation and all that stuff. So you kind of have to separate the two, and you don't want to put all that in one account. Which is old news, nothing really new there. I just really wanted to kind of emphasize that, because I think October, it really hit home. So actually September, even though it was one of my best months, I had no great trades. I had no home run trades. I don't know, maybe like I had a 7% winner, an 8% winner, maybe a 9% winner with the day trading, which are good, but I didn't have like a 10+% winner, which is crazy in my eyes. I was like, I feel like I usually always have at least a few of those, but it was one of my best months, and I only took a lot of base hits. So we'll see that in the stats in a little bit. One thing I also want to kind of mention here is day trading. You always want to build a cushion first. It's so important to kind of not get stopped out. And a way I've done that, and you guys probably seen in a lot of my trading, is, my first trade on the day is always my smallest trade on the day, or ideally it should be the smallest trade on my day. So first trade, I'm just, dipping my toes in the water. If it's a great home run trade, boom, great, I made whatever on that. But if it's a horrible trade, which sometimes happens, at least I don't stop myself out of the day. I don't do anything silly. So it's kind of good just to kind of get one trade out of the way. I know it sounds a little bit ridiculous, but it's kind of like my first few trades, I'm building up a cushion, right? And then once I have, let's say, $200-300 up on the day, which is, my average position size right now is about $3.8 thousand, right? So let's say once I have about 5% cushion, then I'll start going in with maybe $4,000, $5,000, getting a little bit more aggressive, even pre-market, if the conditions are right, because that way, if I have a big losing trade, I'm still break even or maybe even green on the day. And I think that's really important, because I've stopped myself out trading I think twice this month. And one time was pre-market, which is horrible, because then like all day you can't trade. And quick little recap here, 10% of my average position size is when I stop out. So actually, let's quickly go to the stats here. This is for September really quickly, just so you guys can zoom back here if you guys want to. But these are my September stats. We made $4.5 thousand using an average position size of $3,000. You can see my total winners here, 72%. So that was a good win ratio. That means basically out of 10 trades, 3 of them are losers, while 7 of them are winners. My average loss here and average win, this is a good risk reward ratio. It shows you that I'm cutting my losses quickly and I'm taking my profits. I'm letting them run, a decent amount. So that's a good risk reward. But the thing is, this month, and this is drum roll, this is for October. Here we go. And October was a sloppy month for me. So $5,000, yeah, it's my biggest profit. It's more than September. but my average position size is $3,800. So actually, ratio-wise, I didn't make, I would say, I would probably argue, I think last month I actually made more money if we had the average position size, again, $3,000. So you can see my trading got a little bit sloppy here. My average wins went down to 63% instead of 72%. Had a bit more losses. But I also had more scratches. That's kind of important to notice. Actually, wait, hold on. Yeah, more scratches. And this is really what I don't like. So if you go back to September, sorry for switching this up all the time, but if you go back to September, you can see, the risk reward, there's a difference, right? You can see I cut my losses quicker. But here it's like, man, this is a close number. I'm basically like all over the place. And this is what I said in October, I was really lacking a lot of conviction. I'd be in a trade, it'd be up a little bit, and then it'd be down, and I would close it out, and I'd be like, oh my God, what was that? And then I would have no chill. I would just be, cutting losses too quickly, holding trades not long enough. When it did actually work out, it was, this is pretty much a 1-to-1 risk reward ratio, and that's not really good. I'm shooting for trades with like a 1-to-3 risk reward ratio, but I'm cutting my losses too late, and I'm holding the winners not long enough. That's pretty much what this means right here. I'm still, going for the same strategies as before. I'm just not, my execution has gotten worse in October, which, it is what it is. Like every month is going to be a little bit different. But yeah, that's something important to note. Before we talk about some of the biggest winners, biggest losers, which actually ended up all being swing trades in October, I do kind of want to mention here, dip buying was an okay strategy for me, made $610 off of dip buying. It's always a strategy where my average win is actually like negative or, worse than my average loss. But I'm usually I have a high percentage of winners because I'm quickly take my profits all the time on these. But it really does limit a lot of upside. Here's a trade with YVR. I'm not totally sure which one this is. I would have to go into the details, but this is a classic dip trade, right? We're like right here, we're buying, and I'm typically selling on the move to the 9 EMA. I know this might be a little hard to look at. Yeah, so here we go. There's a good one. So we're buying here, and I'm usually selling on that move to the 9 EMA. This one looks like I held a little bit longer. I was looking for that break of 1.9. It looks like this one failed, and then I sold on the second attempt. But yeah, that's a classic dip trade right there. Okay, going here a little further. My second good pattern here is obviously the, let's go zoom here. The red to green move, you guys are well aware of this one. This one never has that many trades, so it's not like the best to talk about in terms of statistically significant, but because 8 trades, so looking at all these stats is a little bit not as significant, but you guys know that this is one of my favorite setups. Like it's always into the open. If we have that kind of failed spike to the upside and we have big support, I'll be buying into that dip, and then I'll be selling ideally into the ticker going from red on the day to green on the day, not percentage wise, but because we're already trading gap up. So let's say ENLV was up, I don't know, 80% or so, and then but the daily candle is still red, right? Because it opened up here and now it's down from the open, so it's a red candle. So what I'm doing is I'm buying on that dip and it's looking for a move for the candle to go from red to green, right? I oftentimes don't hold these long enough. I don't know, I don't trust them all the time, especially kind of what we've been seeing lately. But I do like to go for those. Actually, the ticker we had yesterday was a perfect example of that. BDVT, that one also had kind of a failed red to green move, but we took it. Yeah, so then we have pullbacks, which is actually one of my favorite trades. Pullbacks were doing really good last month, very consistent on these overall. You can see here my average win was pretty okay with these. A pullback is a pretty straightforward trade, right? Pullback, which one? This is the pullback here. This is MGI MoneyGram we traded. So we're clearly breaking out. We're above VWAP. We're above the 9 EMA. We're coming back to the 9 EMA support. I'm usually buying on that support, looking for a breakout. This was a very weak move, and I don't know, based on the price action, this was an okay trade, but I didn't hold long enough. At least the setup was good. I think the selling here was very weak, or the buying was weak. You can see here with the volume, it wasn't a lot of volume either, so it looks like I closed this one before a possible breakout. So yeah, I mean that's pretty much the nutshell of this one. I like to trade pullbacks more than breakouts. To me, breakouts are very bad patterns. I suck at them. I always freak myself out. yeah, it's just not something that I'm consistent with. You can see here, oh God, this was such a messy ticker. Let's quickly go down a little bit more. ITP, let's go to, so this is a breakout right here. We have a flat top move. I buy the breakout, looking for that continuation. We don't really get the continuation, and then I don't know, somehow I always end up buying into fake outs, and it doesn't work that well for me. I would rather buy after the breakout on a move back down near big support. That's really what I would rather be doing, instead of just, blindly buying that breakout. Everyone's a little bit different, but to me personally, based on, my kind of experiences, I've noticed that works much better for me. Again, everyone's going to be different there. Okay, so what we could talk about here is some trades that are worth mentioning. Obviously, the biggest losers and then the biggest winners, or just in reverse. Actually, this is why I was so confused. Biggest winners and the biggest losers. They were all swing trades last month, which is kind of weird. And also, I had a lot of unrealized swing trades last month that I'm going to be probably realizing this month. So we'll see. I think we have some more losers coming, which is a little bit unfortunate. The first one, CHS. This was a pullback swing trade. This is actually kind of a funny one. It was a retail company, and usually I'm not Chico's, if you guys know it. I'm not crazy about trading retail. I don't follow it very closely. It's not something that I know too much about. But based on the overall setup here, I really was a big fan of this one. If you just kind of zoom in here, you can see. Let me get this away. You can kind of see here, there's huge support on the daily chart, and that's why I was looking to buy this one. I wanted a bit of a bounce off that support. Anyway, we had that first bounce here, and it looked like there was big volume here, so I really liked what I was seeing overall. So I wanted to buy a quick pullback. I bought the pullback near this bigger support zone. It did dip a little bit lower, but then I ended up, having this nice move higher, and then I eventually closed near the high there. So that was a pretty sweet trade. Here is I don't know, this is like a 5-minute chart. Yeah, this is a 5-minute chart. So this was a pretty sweet and simple trade, really following the momentum. The unfortunate thing on this one is I didn't get my full size. I wanted 4,000 shares. So even though this was a 20% winner, I only made, $379 off of it. I'm not complaining, but every trade you're taking a certain amount of risk. So sometimes it's also like, sometimes I have I don't know, a small green day, like $100, but I'm not super stoked because I'm like, I could easily have a $400 red day tomorrow. So you need sometimes more substantial green days or green trades to make up for those, inevitable red trades. So I don't know, I was happy about this one. But I was like, man, this was such a good opportunity. I can't believe I didn't get my full size on this one. So I was a little bummed out at the same time, but hey, it was my biggest percentage winner. So that was, kind of cool. Fairly simple setup there. HYLN. This was a little bit more sketchy. We had a bigger support line bounce here. You can see on the daily chart. Boom, boom, boom. We came back all the way here to 26 or so. I bought in this area. Actually, where was my average size? I'm not totally sure here, but we were buying. Oh, actually, I could look it up. So my first entry on this was a 26, 27, and I sold at $30. I was accumulating here where we originally had a big breakout, and then we were kind of coming back to the 9 EMA, and I closed out on this one. Fairly quick move. Here you can see my little green entry arrow, and then you can see here near 30, I just kind of closed out this one. Took some profits off the table. I was not holding into this one. I was not investing. This was a very, very simple day trade with a clear entry and an exit. And then we had AMC. This was a bigger loss, and this is like before I was just talking about, you want to have those bigger green trades to make up for those inevitable red losses. This was a 13.41% loss, kind of unfortunate. And this is the one I had the full size on. So that's why I'm saying it's a little bit annoying. This one would have been great to have the $2,000 size on, but it had the $6,000 size. If these two trades were switched, it would have been a totally different story. So you want to, remember every trade is not created equal. Understand which ones have a little bit more risk and maybe reduce the position size at one point. This one did kind of compile with big position size because you could see here that I averaged down a lot. Because this thing really fell off the cliff at one point. Because they had that, possibly going bankrupt news, which actually ended up being fake news. But the damage was done. So I was, buying here again on support, looking for a big move higher. And then all of a sudden we, crashed here. And this is when the news came out. And then this thing at the open fell off a cliff. And I actually bought one more time when it fell off the cliff, just because I knew that there was going to be probably a big chance of a bounce. And on the first bounce, I sold near the highs. And, it ended up actually going past $4 at one point. But, I was stopped out, quote unquote. and I knew on the next bounce I would, exercise that stop. It was a mental stop, and I was pretty much just waiting for a big bounce because I didn't want to sell into the flush, because on a ticker like this, on a mid cap, you pretty much know that there will be a bounce at one point. Especially because the news was, clearly fake, or not verified. It was just rumors of a bankruptcy, and then the CEO already came out and said it's not true. So yeah, that was kind of a little bit annoying. Here you can see the stats so far. For November, we are actually down because we realized a swing trade here, LMND. Oh yeah, this is only, actually we have to go to the unlimited account. But if we did not realize that one, it would actually be green. We are up so far on November day trading. It's just the swing trade, unfortunately, is mixing up the account because it's also in our day trading account. And this is what I mean. So our day trading account is the unlimited account, and then our swing trade, and this swing trade was in the unlimited account. So it's just like, it's one of those things I don't really like combining, because now my stats are a little bit skewed, and it's just, I don't know, it's something that has been bothering me a little bit, so I will be focusing more on kind of separating the two, but I do kind of want to point that out. Oh yeah, by the way, in November, this is going to be really, really good fun. We are going to have a huge upgrade to our office. We are getting a new, pretty much core of everything. We're getting a new laptop, and this is going to be coming in the next 3 weeks. Once I'm back in the States, this beast. And if you guys are ever curious on some of the equipment I'm using for streaming or just my general office, I'll be always uploading the latest stuff here for you guys to check out if you guys are interested. You can also see my reading list here if you guys are curious. This link is also in the video description below. Yeah, so that's my, biggest winners, biggest losers. I think really the big thing here, more than anything, is really to be focusing on trading the market that you are in. And in pre-market, you got to be careful. You got to, manage your risk pre-market. You got to go for those base hits pre-market. And then as you kind of build that cushion, you want to get a little bit more aggressive. So far, we've been seeing kind of a shaky November, mainly probably because of the elections and the second, third, fourth wave, whichever country you're in right now with coronavirus. I think there's a little bit more uncertainty, but when the market is overall a little bit more consistent, so it's not up or down over, let's say, 1.5%, then small caps tend to be a little bit better. We had last week was a really shaky week, so if it's a shaky week, we're not getting clean setups, just be very cautious. There's no reason you have to trade any single day. And I think for me, that's a big problem because I'm streaming every single day. So I'm thinking, well, since I'm sitting here streaming, I might as well get some trades in. And it's a very backwards way to think, because I should be really thinking, is there a good setup? Yes, then I should trade. Is there not? No, then I shouldn't trade. So it's really that simple. And I think sometimes just because I'm streaming all the time, I kind of talk myself into a trade, because, there is always somewhat of an opportunity, but it might not be that great of an opportunity. If you guys are totally new here, remember we go live, or, quick little update here. We go live every morning at 9 a.m. Eastern Standard Time. We go all the way till 11 a.m. Eastern Standard Time. We stream every weekday on YouTube, where we trade, where we first review the watch list, then we trade the market open every day. If you guys are interested to learn more, we have a whole Foundations video series. It's totally free, and all this stuff, actually this whole entire post is going to be in the first pinned comment in the video description below. So guys, I can't wait for November and December. It's going to be an interesting last 2 months of the year, and then we are going to be into 2021. It's going to be super, super exciting. It's like the small cap challenge and all that stuff is behind us, and we're really looking to now take our trading to that next level. It's going to be a heck of a year, 2021. I can't wait to have you guys join me on that journey, and yeah, we can all learn from each other. Let's wrap it up here. I'll see you guys for the market open today. Till then, guys, stay safe and make some awesome trades like always. Ciao, ciao.